Hi Gaurang, good morning.
Hi, morning to all of you all. Thank you for having me on the show.
Yeah, always nice to speak to you, sir. Now, want to first come on the big cues that we'll be tracking this week. Now, US Federal Reserve will come out with its policy decision on Wednesday night. What are your broader expectations? Do you expect the Fed to keep the rates unchanged this time around?
So I think we've discussed this particular issue earlier also, Suyash, and I have very clearly mentioned that Fed needs to do something which they have not done, given the kind of situation that they have landed themselves into. And we, all of us were aware about this particular issue about inflation, interest rates, and yields in the United States in the beginning of this year. How and when they will move will totally depend upon what the situation and circumstances are over there. Maybe they might have to do some aggressive moves in terms of taking care of stability over there and trying to, keeping in mind the economic growth as well. So, and by and large, I think in our markets, Suyash, FIs have been selling for quite a while now. So it's not a surprise to us. Maybe there might be a knee-jerk reaction to whatever the Fed has to say over there. And then I guess we'll get back to business. And not to forget, we have corrected from 20,200 to about 18,850, and then we bounced back on Friday. And today again, we are down on the market. So by and large, I think what correction we've seen on fallback of what US is to say, I don't see any meaningful correction coming in our markets.
So, before we get on to FIIs, Amit, sir, I also want to get your view on the markets or the overall sentiment that is in the market. I mean, the kind of bounce back that we saw on Friday, a 1% jump, although the market had corrected about 5 to 6% from its, the peak of 20,200 levels. What is your read on the overall market mood, sir? I mean, is the sentiment still bearish? If we see correction, more correction from here on, what are the levels that could provide that crucial support for Nifty going forward?
So Suyash, I mean, I normally don't wear a technical hat because I'm not capable, but at least what my good friends tell me, I think if you recollect, if you spin back some months back, earlier it was 19,200, 19,300, which we all thought was a sacrosanct floor because that was the low of the entire month of August. August, we spent 19,200, 300 on the lower side, 19,500, 600 on the higher side. Before that, it was very difficult to take off that 18,800 mark. And very recently, post the kind of sell-off that we've seen and the concerns which are developing in the Middle East as far as Israel, Hamas, Iran, etc. concerned, US, uh, we have not broken that level of 18,800 up till now. Wouldn't be surprised to see that level being broken in case if there is some aggressive negative news flow coming out of the Middle East. And of course, if crude oil prices have to go up. But I guess 18,600, 800 could be a floor wherein I don't think it will be very easy for the bears to hammer that down. But not looking to time the market. I think given the correction in terms of percentage and point wise, in terms of valuation, I think these are great times to start accumulating stocks from a long-term point of view. Not to forget, Suyash, you have 5 state elections and a result after that, and you have big election next year. So our markets are going to be in a range-bound trajectory for some time, but use all opportunities to nibble into the markets, fundamentally strong companies, provided you have a year and a half plus kind of a time horizon.
Hi Gaurang, Amit here. Now, JP Morgan has upgraded India along with what Morgan Stanley and Nomura had already done before. From the valuation standpoint, according to you, where do we stand?
So I think, there was, in terms of broader markets, I think we need to be really be careful, especially in the small cap universe. Mid cap sector specific and nibble into. In terms of valuation and the fact that we are in the middle of the second quarter earnings, I think we are relatively well placed there might be pockets of overvaluation. Uh, like for case in point, we saw defense sector run away, we saw power stocks running away, we saw railway related stocks run away. But over there also, you've seen a meaningful correction come through. In terms of where do I see value in terms of investment ideas from a long-term point of view, I think banking and finance will be the first sector, uh, followed by autos, followed by cement, followed by IT, possibly FMCG would be the follow-up sector. And I would surely, request your viewers or advise your viewers and investors that try to stick to the large cap in these sectors. There are meaningful mid cap ideas also, but small cap is something that you need to possibly be extremely careful. I mean, possibly, you would have to put small cap companies under the microscope and then possibly decide whether you want to invest or not.
Now, Gaurang, you mentioned that banking, from a valuation point, looks attractive, but the banking index overall has been a major laggard for the market recently. I think from between the two, Nifty and Bank Nifty, Bank Nifty has corrected quite significantly, about 8%. It's off from its all-time high levels. The results altogether were pretty good. I mean, you have seen a good improvement in asset quality. Loan growth has been all right. So, what is the headwinds for the banking sector? Why are we seeing this sort of correction in the banking pack?
So whatever goes up comes down first, Suyash. And please correct me if I'm wrong. Nifty Bank or Bank Nifty was the first one to hit the all-time high. Along with that, you had meaningful kind of runaway rally in the Bank Nifty or Nifty Bank. And whenever markets correct, whichever sectorial index has gone up first will be the first one to lead on the downside. So I'm not surprised to see the kind of correction whatever 8% correction you are talking about has come in after a meaningful upside. So let us not forget that. And it is history of our markets, especially, that whenever we go up, it takes a while, but whenever we come down, we fall off the cliff as if there is no bottom. So I think there are great investment ideas, starting with your private sector banks, followed by select PSU banks, followed by certain strong NBFCs, microfinance companies, housing finance companies. So, I mean, whatever has gone up first will be the first one to come down.
But sir, given that private banks did not really participate in that run-up, would you recommend perhaps focusing more on the private bank side of things instead of the public sector banks, given that they have already some of them turned multi-baggers, the smaller ones at least?
So I would not comment on very small public sector banks because we don't have a coverage. But I am of an opinion that should have a balanced approach. You cannot have one and neglect other. So I think likes of HDFC Bank, Axis Bank, ICICI Bank, Kotak Bank, likes of State Bank of India, Canara Bank, Bank of Baroda, PNB. These are the names amongst the public sector universe, which are strong names and with strong earning visibility. I don't think you should deprive yourself of either or either. I think you should have mix of both in terms of investment long-term ideas.
Gaurang, something that you also mentioned, now FIIs have been offloading Indian equities continuously and incessantly. Given the strong US bond yields and the high interest rates and a strong dollar, do you see this trend to continue across emerging markets? That includes India.
So FIs have sold earlier also. And sometimes I wonder the wisdom. You sell at 15,000, you come and buy at 18,000. I'm talking about Nifty. So, I mean, they'll have to do what they have to do. But I think we are capable of our own strength, our own capability, our own thought process, our own conviction in terms of what we are, where we are, and where we are likely to go. If I don't, and I normally don't try to ape what FIs does because I don't understand what they do sometimes. On the domestic front, if you go to see whatever we've had numbers in terms of footfalls as far as SIP is concerned, flows as far as equity related mutual funds are concerned, Investor numbers are going up. I'm quite optimistic about that part. And the fact that FIs have sold so heavily, but what you are not seeing is, my dear friend, that domestic institutions have had the liquidity power to absorb that selling what FIs did. Had it not been for the domestic institutions standing tall and absorb that selling, we would have been possibly down 25-30%. Who knows?
All right. Now, Gaurang, we are also in the thick of the earnings season. Reliance Industries came out with its numbers. The numbers look good on all fronts. I mean, if you look at retail's numbers, double-digit revenue growth over there, a steady quarter for Jio as well. But the stock, it's up this morning about 1.5%. But overall, I mean, on a year-to-date basis, on a 6-month basis, negative returns. What's the big overhang on Reliance Industries? Why are investors not really, buying into that growth story that Reliance has, tried to sell us over the last couple of years?
So all these things takes time, Suyash, to play out. Whatever they have said in terms of where they want to take their businesses, existing businesses, green hydrogen, oil to chemicals, uh, all other related Reliance retail related investments that they have attracted. So these are announcements that were made about maybe about 6, 8 months, 12 months back. And not to forget, markets also have corrected. Being Reliance being a large cap, it has to reflect what the benchmark indices do. We remain extremely positive in terms of old businesses, new businesses which are likely to go on stream in the next couple of quarters, and the investments that they have made. Uh, Let me give a blanket disclosure. We do have a positive coverage on the fundamental side on Reliance Industries. And you need to give it time.
Okay, you need to give Reliance some time. That's the view from Mr. Gaurang Shah. Mr. Shah, always a pleasure speaking to you. Thank you for joining us on First Take this Monday morning. Amit, thank you for joining us in the studio as well.